Now friends, you have already learned about two sets of accounting standards. One is your normal accounting standards or local accounting standards, we can call it as, I will call it as local AS. Local accounting standards or local AS. And now the super accounting standard, which is known as the IND AS. Okay, IND AS. Now we have already seen when you have to apply what IND AS. Okay, so automatically in other cases where IND AS is not applied, what do you have to follow? You'll have to follow the local AS. I'm talking about the companies. Okay, now in this discussion I will just quickly take you through the criteria to be seen when it comes to application of IND AS or accounting standards. We have already discussed it, but I will give you a synopsis view. Okay, now in case of banks, insurance companies, limited liability partnership. Of course, limited liability partnership is not a company, but it is a corporate form. Okay, corporate entity. Now mutual fund. Mutual fund also is not a company, but I have included it here to remove all confusions. Okay, and in case of trust, again not a company, but again I am bringing it for more clarity. And any other non-corporate entity. Any other non-corporate entity means it will be proprietary firms. Okay, proprietary or partnership. Okay, trust, etc. Okay, all these entities, can they follow IND AS? The answer is no. The answer is no. Okay, so any bank, insurance company, LLP, limited liability partnership, mutual fund, trust, then any other non-corporate entity cannot follow what IND AS, not permitted. Now, when it comes to companies, you have got three methods or three types or three categories. One, those companies who have voluntarily adopted IFRS. So this is the companies where you don't have to statutorily apply IND AS, but the management decided, okay, let me adopt it voluntarily. Okay, that is the first set. Second, you don't have an option because you have either a listed entity or you have crossed the threshold of IND AS application, that is 250 crore, or you follow within that group in which IND AS is applicable. So either of these conditions you have to mandatorily apply IND AS. That is the second category. And the third category, other companies. So in the first two categories, IND AS have to be applied, whereas in the third category, that means other companies who are not mandatorily required to follow or who doesn't follow IND AS voluntarily, they need not follow IND AS. So here it will be local AS. Okay. Now when you come to NBFC, what is the difference? In NBFC, you don't have this voluntary application. Either it is mandatory application or no application. So if the mandatory application criteria are met, then IND AS is applicable. If that is not met, then IND AS is not applicable. Okay, so voluntary application of or adoption of IND AS is not permitted in case of NBFCs, but it is permitted in case of other companies. And when you talk about bank or insurance companies, IND AS cannot be applied unless you are permitted by IRDA or RBI, and IRDA or RBI has not given that permission so far. Okay, so both in case of companies as well as NBFCs, you have a stage-wise application, that is phase 1 and phase 2. Here also you have a stage-wise application, but now that stage-wise application timeline is also over. Okay, now it is like whichever has got more, 250 crores or more net worth, you go ahead, or you are in listed status, you go ahead with IND AS, or you are within that group structure and either of your group companies is following IND AS, then you should also follow. I hope that is also clear to you. This is only a synoptic view of the IND AS and local accounting standard application. I hope that's clear. Thank you.